Welcome back. You're watching us here on Halftime Report. It is halfway through the trading session. Also important to get in what the markets are doing in terms of an F&O space, primarily because we do have the expiry playing out in a day and a half from now. We've given up all the gains. In fact, there was some recovery from the lows, and currently we're back to the low point of trade. And it was led, the recovery itself was led by the Nifty Bank. However, on the way down as well, it is the Nifty Bank which is leading the Nifty lower, currently around that 17,836 mark, which is pretty much close to the 20-day moving average of 17,839. What's taking place right now is that a fair amount of put writing action was visible at 17,900 as well as 17,800. So if you just take a look at the 17,900 put, almost 30 lakh shares added for in open interest, and the 17,800 put as well. 95 rupees in terms of premium out there, telling you 17,800 as well as 17,750 is being sought as an important support. And where we are right now, 17,839 is a crucial mark, primarily because it is the 20-day moving average. On the way up, however, levels upwards of 17,900 facing a stiff resistance. That's where call writers are extremely active as well. So if one is writing both the 17,900 call and put, they're looking for a range of 17,800 to around 18,000 on the indices for expiry. Resistance, stiff resistance near 17,950 to 18,000. That's where the option action is pretty active. In fact, option action is the most. Also watch out for the Nifty Bank, because while it recovered from the lows, it is still way below its 20-day moving average. If it does go there, it is likely to face some resistance, just the way the Nifty itself is facing resistance. So where does it all leave the charts? We have Sacchitanand Uttekar of Tradebulls joining in. Sacchitanand, we do have a bunch of cues coming in terms of expiry related moves. What do the charts suggest?
Good afternoon, Mangalam. Mangalam, I think the broad structure still remains negative. We have already seen a smart pullback in the morning session, but if you look at the entire data set, it was exhibiting that 17,960 could remain as a very strong hurdle during the day. So again, we have seen that the Nifty is drifting lower, and if you look at the daily setup, we clearly have a 5 and 20 crossover on the negative side. We also had the RSI falling below the 50 line yesterday. So these are the triggers indicating that there is further weakness which is yet to be witnessed, and that's why we are recommending building fresh short positions when it comes to Nifty and Bank Nifty as well. The fresh trade setup still stays on the lower side. We are expecting the expiry to shape up somewhere close to 17,700, 17,750 kind of a zone. So we are still preferring building shorts. The stop loss should be placed at 17,960 from here on for the Nifty, and we're expecting a drift towards 17,750 eventually when we see the expiry day trade shaping up. When it comes to Bank Nifty, the 40,500 support was respected well, but eventually we see this particular support also getting breached. We're expecting the Bank Nifty to drift towards its 200-day exponential moving average, which is placed at around 40,000. The stop loss should be placed at around 41,040 on a closing basis, and even here I think fresh shorts could be deployed.
Okay, that's interesting. You're expecting a move down towards 40,000 for the Bank Nifty. Stock-wise, what would you probably have a call on or a strategy on within the Bank Nifty in terms of individual constituents?
Well, I think the entire pocket of PSU banks have been on the negative side. We already participated with trades on the negative side with SBI, but right now I think yesterday we saw a fresh breakdown in Canara Bank. If you look at the entire structure, it looks like a classic triangular formation which has witnessed a breakdown. So we are expecting a follow-through movement there. The March levels indicate that this particular move can extend towards 276, and that's why we have recommended building short positions when it comes to Canara Bank. The stop loss should be placed at around 290. The other stock which is on our radar, which we have also recommended to our clients, is SBI Life. Clearly, if you look at the structure, it is in a classic low top, low bottom sequence. We've already seen a breakdown from a bearish pennant formation. The pattern is indicating a price target towards 1100. So even here, we are recommending building fresh short positions. The stop loss from a trading perspective should be placed at 1168, and the pattern target is placed at around 1100.
Okay, all right. Thanks a lot for joining in and have a great day. So that's Trade Bulls talking about all the stocks in focus. Let's slip into a short break. When we come back, we'll get you an exclusive chat with the management of JK Tyres on demand trends. Stay tuned.